Hello and happy Mother's Day, everybody. I hope you've told your mom you love her because you might need to go and spend some more time in her basement. uh, Bitcoin is currently starting off this is the weekly chart. Its sixth straight week of red candles. I don't think Bitcoin has ever done that before. I think it's pulled 5 a couple of times, but I don't think that it's ever pulled 6. And this is a fresh candle. It's a week-long candle, so we won't know until, I think next Sunday, somewhere around 8 or 9 p.m., depending on where in the U.S. you are. So we'll see. I fully expect it to be another red candle, but, as someone I was just listening to on a podcast mentioned, Bitcoin could 10x next week. It really could. So I continue to dollar cost average. Yeah, moving on. Everything is going to be about price pretty much today just because it took a nice hefty dip. This says Bitcoin slides to a 3-month low around $34,000. And it has hit this price range several times before, so we'll see how if the volatility the volatility is actually decreasing. I hate this website. The volatility is actually decreasing over this time period because you can see like the rate of change, how quickly it changes. Is just like the up and downs aren't quite as large and quite as fast as they have been in the past. So that is somewhat of a good thing. Bitcoin becoming less volatile for large investors. That's what they like to see. But we'll see where Bitcoin goes. But it's been down for it's almost down 50%. We might bounce off of 30,000. Like we did back here 29 and some change. But if we did, that'd be pretty sweet. This also says Bitcoin clings to $36,000 as data suggests the Bitcoin price sell-off came from short-term holders. So most likely, traders, people that don't really like hold on to all of their Bitcoin. They don't, they keep it all on exchanges, and so they're trying to make as much money as they can. Where, the smart money really just holds Bitcoin and takes it off the exchange. And I believe exchanges can use the Bitcoin that you leave on there as leverage for positions and trading that they do. So if, Coinbase, for example, wanted to open up a short position against Bitcoin, they could leverage your Bitcoin against that position so that they could do that. I'm not 100% sure if that's actually possible or not, but just, for best practices, you should definitely keep your Bitcoin off of the exchanges, regardless of whatever they're doing with it. Just exchanges tend to go down, from time to time. This is pointing out that some people are accumulating huge amounts of Bitcoin. I tend to not really pay a whole lot of attention to chain analytics because, who's to say that this is an exchange or a miner or some large player that had a lot of Bitcoin that's just moving funds around. If you have access to a whole bunch of different wallets and you're consolidating them all into like one wallet or something like that, because, it's really like all of the circulating Bitcoin out there really doesn't matter anymore. The only thing that kind of like, if I'm thinking about this right now, the only thing that kind of matters is the amount of new Bitcoin that's added to the amount that's circulated, and also the amount of Bitcoin that is lost in people's wallets. People that don't really understand how to hold their own keys. The amount of Bitcoin actually circulating, I don't think matters a whole lot. Just the amount that actually is accessible that people can get to. So this, one wallet, accumulating several thousand Bitcoin or something like that. I don't really take a whole lot of weight in because you never know where it came from, who it is, what's happening, what's going on, because I doubt it's just like somebody out of the blue, like some large institution buying up a whole bunch of Bitcoin. It could be somebody just playing games to get note in newsworthy pieces like this. So, moving on. If you use the software NiceHash to mine Bitcoin, then just know that apparently Nvidia in the past, you probably know this, I did not know this until I read this article, that Nvidia had implemented they call it a light hash rate feature or locking of their GPUs because a lot of crypto or Bitcoin miners were using GPUs to mine Bitcoin, and it was outpricing people that just wanted to play computer video games. And so they implemented this, software, feature or whatever, into their graphics processors so that they couldn't be used as Bitcoin miners. But however, NiceHash seems to have unlocked that. So good news for those of y'all that bought into Nvidia hardware. NiceHash has come to your rescue. Next, this is not what I thought it was. This is the same article. Moving on. Robinhood lists Grayscale, Bitcoin, and Ethereum trusts on its app. So if you use Robinhood, you can now get Grayscale's Bitcoin trust, and you can ditch the Ethereum one. So good news all around. That's good stuff. Oh, and by the way, Grayscale is trying to get their GBTC trust into an ETF, a spot ETF. And you should go and email the SEC and tell them why that should happen, why you want a spot ETF, why you want GBTC, Grayscale's Bitcoin Trust, turned into a spot ETF. If you would do that, that would help out the space and the community immensely. I have done that, and I just, if you own, hold, mine, transact in Bitcoin, then it's probably something that you want done. Lastly, an apartment in Portugal has sold for Bitcoin, so that's pretty neat. So I could not find anywhere on here that said if there was a tax rate, what any sort of commission was. It just says it was worth around 110 euros, which is roughly 3 Bitcoin. So I assume that the tax rate was either 0 or very beneficial to whoever bought it and or sold it, because dealing in crypto, Bitcoin, it should be tax-free because it's money. And you probably wouldn't go through with the deal if it wasn't beneficial for the both of you. So cool, good news all around, and I will see you all next time.